When people analyze the Corleone family, they usually focus on the street-level violence, the vendettas, and the strict codes of silence. But look past the hitmen and the political corruption to find a masterclass in 20th-century corporate capitalism. This chart compares the estimated street-level revenue of a standard 1990s crime family to the towering wealth of the Corleones. By the time Michael Corleone died in the late 90s, adjusting for inflation, his family's net worth sat somewhere between $3 billion and $5 billion. A valuation that massive requires entirely different mechanics than shaking down local businesses for protection money. Scaling to that level requires a highly diversified, efficiently managed portfolio. We can only understand the scale of this wealth by analyzing the Corleone family through the lens of a hyper-successful shadow private equity firm. In the 1910s and 20s, Vito Corleone started building his empire in the dense, blue-collar markets of New York. He operated like a neighborhood angel investor, fronting cash and solving local disputes to build vital political and social capital. By 1920, he made his first major corporate acquisition, the Genco Pura olive oil company. This was a physical, cash-generating retail business with massive inventory. Genco Pura quickly became the largest olive oil importer in the United States. It was a highly profitable, legitimate supply chain operation on its own merits. This diagram illustrates the structural genius of his firm. The clean, green logistical supply lines importing olive oil perfectly shielded a secondary layer of high-yield smuggling operations running actively right beneath them. Vito relied on the strategic mastery of this dual-stream revenue and complex physical logistics. He used violence occasionally, but logistics formed the true foundation of his empire. In 1945, a Kirschen business proposition tested that foundation. Vito received an offer to finance a highly lucrative new narcotics operation. He declined to enter the drug market. This decision functions as a strict lesson in modern corporate risk management and capital preservation. This scale maps out his risk calculus. It weighs a high speculative yield from drugs against their entrenched political capital with judges and politicians. Touching narcotics would shatter that political protection, triggering a domino effect crashing all existing business. By prioritizing capital preservation over an untested speculative market, Vito saved the firm's core valuation from a rapid bankruptcy. When Michael Corleone takes over the firm in the 1950s, he initiates an aggressive expansion strategy, pivoting away from the low-margin, blue-collar protection rackets of New York. He deploys massive amounts of capital into the bright, highly visible world of Nevada gaming and casinos. This move from local rackets to gaming is the equivalent of a firm shifting from low-margin retail to high-margin digital products. While the physical operations are massive, the gambling model allows for aggressive scaling and generates near-instant daily cash liquidity. By 1959, Michael attempts to duplicate this high-margin success by expanding operations into Cuba. The Cuban Revolution functioned as a textbook black swan event, an unpredictable, extreme macroeconomic shock that overthrew the existing order. The installation of the Castro communist regime resulted in an immediate, total, and unrecoverable overnight wipeout of the Corleones' entire Cuban business stake. Warning tone: rapid scaling in new territories creates massive wealth, but it exposes the firm to severe geopolitical vulnerabilities that local street-level power cannot control. Every shadow conglomerate eventually faces the exact same final objective: executing a clean exit strategy to wash dirty capital into a permanently legitimate enterprise. In the late 1970s, Michael executes his boldest merger and acquisition move by making a staggering cash deposit of $600 million. The target for this capital deployment is Immobiliare, a $6 billion European real estate conglomerate. By using the Vatican Bank to ratify the paperwork, Michael secured the endorsement of the world's oldest institution, effectively laundering the family's legacy through an unassailable corporate partner. By the 1990s, the Corleone family operated as a fully legitimized, highly diversified private equity and real estate firm worth up to $5 billion. Logistics, risk management, and strategic acquisitions function exactly the same whether you operate on Wall Street or in the underworld. The mechanics of building a multi-billion-dollar empire are universal. Yet, as Michael completes the ultimate acquisition, he does so completely isolated from his family. He secures absolute corporate power, only to find himself holding an entirely empty personal ledger.